Hi friends, this is Kailash Sharma from Trading Discipline. Friends, I welcome you all in this video. Today, friends, I have got various requests of my followers and some friends. So, on the request of my friends, I am making this video because many people ask me about the need to invest. So, it's very important when it comes to stock market or investment in financial planning. So people, they don't understand where to invest and why we need to invest and what all investment options are available to what. Okay. So friends, looking at those things, I'm making this video. In this video, first of all, there is a question that need to invest. So simply telling friends, investing money is necessary to survive the increasing cost of living, or also simply called inflation. Right. So in this video, we will learn about the need to invest, then different investment options and comparison. Last, that is the things to know before investing. So let us start with this without wasting time. Okay friends, let us take an example. Why should one invest? So before going into details why we should invest, let us take in a situation that you work somewhere and you earn, your monthly income is 50,000 per month, and you spend 30,000 rupees in different household different things, right? And the balance 20,000 is left as surplus that you have an extra money. Okay, so let us, for the simplicity, we ignore the income tax in this discussion. We will not discuss income tax at all. Right. So to drive this point across, let us make few things, few simple assumptions. So suppose your employer gives you 10% salary hike every year, and the cost of living is likely to go up by 8% year on year basis as inflation. And you are 30 years old and want to retire at 50 years, living 20 more years to earn, and you don't intend to work after you die. Your expenses are likely to are fixed and don't foresee any other expenses. And the balance cash of 20,000 per month is retained in the form of hard cash. Right? This is our situation. Now going to about assumption. Here is how the cash balance will grow in 20 years. So if we take a calculations after 20 years of hard work, you would have accumulated rupees 1.7 crore rupees. We just do the calculation. So I made this calculation and we can make this much money. Okay, since after you retire, assuming the expenses will continue to grow at 8%, means that inflation is to grow at 8%, and your 1.7 crore rupees is good enough to save you through roughly for about 8 years of post-retirement life. But 8 years onward, you will be in a very tight spot with literally no savings left to back you up. So what would you do after you retire, run out of the money in 8 years? After 8 years. So how do you fund your life? Is there any way to ensure that you collect a large sum at the end of 20 years? Let us see. So let us consider another scenario where instead of keeping the cash idle, you choose to invest the cash in an investment option that grows at, let's say, 12% per annum. For example, let's just take a situation. Okay, with the decision to invest the surplus cash, your cash balance has increased significantly. The cash balance has grown to rupees 4.26 crores from rupees 1.7 crores. So friends, I have made this calculation, so I'm just telling that how much money it can be if you invest it in somewhere that you get 12% per annum returns per 12% per annum. So your 1.5 crore rupees would become 4.26 crores. So that is 2.4 times more the regular amount. So this translates to you being in a much better situation to deal with your post-retirement life. Now going back to the initial question, why invest or why we should invest? So friends, there are a few reasons one should invest. First of all, there is inflation. So we have to fight inflation, which roughly increases by about, we can say, 7, 8 to 10%. It may vary from year to year, right? So this is by investing, one can deal better with the inevitable growing cost of living, which is generally referred to as inflation. Secondly, to create wealth. By investing, one can aim to have a better corpus by the end of the defined time period. Or we can say, this time period can be anything, means you may relate the time period with some goal also, like your child's education, marriage, their house purchase, and retirement holidays, etc., and to meet the life's financial aspirations. So these are some of the reasons why should we invest. So let us see what our options are available and where we have to invest. So friends, there are some common, available options of fixed income instruments, then equity, next is real estate or commodities and precious metal like. Okay. So typical fixed income investments include fixed deposits offered by banks, then bonds issued by the government of India, then bonds issued by government-related agencies, bonds issued by corporates. So as of June 2014, the typical return from a fixed income instrument varies between 8% and 11%. So this can be, average return, right, as per the data of June 2014. So let us see forward. So let us move to equities first of all. So friends, Indian equity have generated returns close to 14 to 15% compound annual growth rate. This is over the past 15 years. And investing in some of the best and well-known Indian companies has yielded over 20% CAGR in the long term. Identifying such investment opportunities requires skill, hard work, and patience. So friends, it's important that getting such high returns of say somewhere around 20% in long term, it needs skills, hard work, and patience, and knowledge also, right? Knowledge also. So taxation on equity instruments held for more than 365 days, that is 1 year, is taxed at 10% if the gains are more than rupees 1 lakh starting from 1st of April 2018. Previously, such investments were tax-free, but now from April 2018, the government has imposed a tax of 10% long-term capital gain. This is comparatively lower the rate of tax than the other asset classes. We have to remember this thing also, but initially it was free, right? So now let us come to real estate. So friends, there are two sources of income from real estate investments, namely that is rental income and the capital appreciation of the invested amount, right? Then comes the commodity, that is bullion market. Investment in gold and silver considered one of the most popular investments avenues, especially in our Indian homes, Indian families. Gold and silver over a long time period has appreciated in value. Investment in these metals have yielded a CAGR return of approximately 8% over the last 20 years. There are several ways to invest in gold and silver. One can choose to invest in the form of jewelry or exchange traded funds, that is called ETF, right? So going back to our initial example of investing the surplus cash, it would be interesting to see how much one would have saved by the end of 20 years. Considering he has the option of investing in any one fixed income, equity, or bullion. That's a comparison, friends. Let us make a comparison of all these investments. So by investing in fixed income at an average rate of 9% per annum, the corpus would have grown to rupees 3.3 crores. Investing in equities at an average rate of 15% per annum, the corpus would have grown to 5.4 crores. And investing in bullion at an average rate of 8% per annum, the corpus would have grown to rupees 3.09 crores. So friends, this comparison clearly tells us that equity tends to give you the best returns, especially when you have a multi-year investment perspective. Means equity investment can give very good returns in the long term, right? This is the best. Okay. Now, there's a note on investments. Investments optimally should have a strong mix of all asset classes. It is smart to diversify your investment among the various asset classes. The technique of allocating money across asset classes is termed as asset allocation. Right. A young professional may be able to take a higher amount of risk given his age and years of investment available to him. Typically, investors should allocate around 70% of his investable amount in equity, 20% in precious metals, and rest in fixed income investments. Right? Moving on. Alongside the same rationale, a retired person could invest 80% of his savings in fixed income, 10% in equity markets, and 10% in precious metals. The ratio in which one allocates investment across asset classes is dependent on the risk appetite of the investor. So as you know, as we grow older, our risk appetite, that decreases. Now, what are the things to know before investing? This is an important thing we should look at. So friends, moving directly, the risk and return go hand in hand. Always remember that risk and return go hand in hand. Higher the risk, higher the return. And lower the risk, lower is the return. Remember this thing. Investing in fixed income is a good option if you want to protect your principal amount. It is relatively less risky. However, you have the risk of losing money when you adjust the return for inflation. For example, a fixed deposit which gives you 9% when the inflation is 10% means you are net losing 1% per annum. So remember this thing in mind. Fixed income investment is best suited for ultra risk averse investors only. Investment in equities is a great option. It is known to beat inflation over a long period of times. Historically, equity investment has generated returns close to 14-15%. However, equity investment can be risky. Then move on to real estate investments, which requires a large outlay of cash and cannot be done with small amounts. Liquidity is another issue with real estate investments. You cannot buy or sell whenever you want. You always have to wait for the right time and the right buyer or seller to transact with you. Gold and silver are known to be a relatively safer, but the historical return on such investment has not been very encouraging. I just told you that over a long period of time they have given just 8% return in the last 20 years time period. So friends, this is all about our. I just tried to explain you what all where we should invest and different things related to what are the options available and their comparison. So friends, I have started 1-year professional traders program, and Trading Discipline welcomes you to 1-year professional trader program. And program charges for this 1-year program are just merely very small amount, even less than maybe someone's. Most of the traders want this stoploss also. It's just 1150 rupees only. It is 1150 rupees only, and the program is for everyone who wants to learn right knowledge about stock market and is serious about the program. So friends, I would say you join my program only and only if you are serious and you want the right knowledge about stock market, because I have met across and I come across various people who have various information in their mind. They know much more than required about the stock market, right? Simply speaking, they have so much unnecessary information which is not required to make money. Remember this thing. Secondly, one more thing, remember there are no shortcuts in life. So you have to struggle to succeed. So I have kept this 1 year's time period so that I can give them full knowledge from very basic level. Even anybody doesn't know the ABC of the stock market. So I have started this program at that level. And currently I have around about 45 learners. Currently 45 people have joined the program. And they are so happy, and they're learning the right knowledge the right way. And many people are even surprised when I'm telling them different things, because they have a lot of information, but once they have joined the program, they came to know that what is the right information, what is the right knowledge about stock market. So anyone who is interested in joining the program, you can WhatsApp me at 9797382772. This is Kailash Sharma, we can say the owner of the Trading Discipline. This is my YouTube channel. So friends, I welcome you all in my program if you are serious, if you want to take right knowledge about stock market. So I'm saying that if anybody doesn't know even the ABC of the market, so I have started this program at that level, from the very beginner level, giving them full information about the financial planning, about the stock market and investment and everything, right? So hope this video will surely help you a lot in understanding what is investment. So friends, with this I am closing the video. Good luck. Thanks for watching this video. Most welcome.